the channel. Thanks indeed. Now, Punita Kumar Sinha is our next guest. She's managing partner, founder at Pacific Paradigm Advisors and independent director of several companies as well. Punita, it's a pleasure to have you back on the channel. Great to have you with us here on the program as well. Prashant this side. It's been an incredible year for India. We are up, as looking at year-to-date return, 6% in rupee terms. Knock off a few percentage points if you want to compare the dollar returns, but much better than the rest of the world, than the best performing number 2 world market. As we wind this year down, Punita, you think this outperformance in a way will continue? Because by all accounts, 23 at least will start on a tough note.
So there are 3 things we should look at. First of all is the macro situation. Now, on a macro perspective, India looks better than what we're seeing in some of the other markets. Our GDP growth, of course, is one of the highest, even though it's lower than what it's been in the past. Our inflation numbers in India are not as high as what you're seeing in the US. US inflation is actually really bad, and the supply chain bottleneck there are far more visible than are in India. So I think that's another issue. And then the valuations, of course, of the US markets were at a premium, and India is also trading at a premium to its own history. But I'll come to valuations later. But just looking at the macro situation, and also when I talk to most of the companies I'm on boards of and other companies, everybody is really looking to India as a source of growth. So whether whether it's R&D, whether it's manufacturing, whether it's membership candidates for the CFA Institute, the biggest growth market is India, and so everybody's focused on it. So that is going to keep the economy pretty stable from falling off the cliff, because there is this inherent demand again from our 1.4 billion people, and also from all the global companies that are wanting to look at India. Now, if you talk about valuations, of course, valuations in India are at a high. As you said, the market's outperformed. So I suspect when the growth begins to come back into the other economies, then maybe we'll see people shift out of India into some of the other emerging markets.
All right. Hi, Punita. Good afternoon. Nigel on this side. Punita, one factor that's causing everyone to get excited about India is growth, right? And that's earnings growth as well. Do you see a bit of a risk to that number? Because the street, as of now, you're comfortable. You're talking about, low double-digit growth for the next couple of years, on an average, that is. Do you see that that may not be possible? If the globe goes into a bit of a recessionary trend, there could be a challenge.
Yeah, I do think there is a risk to earnings growth. And if you look at the earnings estimate revisions, the last 1 month has seen more downgrades as compared to the last 3 months. So we are seeing the sharper revisions downwards beginning to start. Also from the companies that I talked to, it seems there's going to be margin pressure, because I think whether it's travel expenses, wage expenses, inflation costs, maybe not having pricing power, all that will result in several sectors and several companies having margin pressures. So I think for the next 6 months, while the economy may have bottomed out and the interest rate hikes may have kind of been coming to an end, I think the economic impact on the earnings is going to be felt over the next 2 quarters.
Punita, afternoon. Rima here. One of the companies on which you are a board of director is a pharmaceutical company. And what we've seen in the last couple of months is a pickup in the US FDA audits. There is no respite on the US pricing pressure, which has plagued the industry for the last couple of quarters now. What is the outlook on the pharma sector, according to you?
So without sharing anything about the company I'm on the board of, so whatever I'm saying is basically very general, not reflective of the company I'm serving on the board of. But yes, there is a lot of price, particularly in the US market, and the generic space is getting very, very competitive. So I think Indian companies that are reliant on generics and the US are definitely facing pressure, in addition to, as you said, during COVID, obviously FDA wasn't able to do on-site inspections. And they were now all the regulators are also becoming more active because they've just come out of COVID. And so they have a lot to catch up on. So I think as a result, you probably are seeing more FTA activity as well. So increasingly, everybody's looking again towards the own growth story of India, the domestic demand, and even Indian pharma companies are beginning to look within India and how to best capitalize the growth in India rather than focusing only on overseas.
Punita, there has been some trepidation that fixed instruments are now yielding pretty attractive returns. And that could kind of compete for flows, which were exclusively going into equities so far. Any thoughts on that and how this could play out?
No, I definitely think that the fixed income market is beginning to look more attractive because as you feel that the rate hikes are peaking, which we hope they are, close towards the end. In fact, now people have started talking about potentially when is the Fed going to cut. I don't expect that to happen in the next 6-9 months, even a year. But yes, the bond markets are beginning to look more attractive. I think the kind of investors are different into equity and into fixed income. So I don't think they necessarily always compete with flows. There are some investors who can allocate across. So that's where we see maybe potentially some shift. But I think balanced funds, anything asset allocation funds are also going to see probably more demand.
Punita, from these levels, what would the asset allocation strategy be then? For equities, if 2023 is going to be a challenging year, would you stay away from the mid and the small caps? Because if that party gets started, then it could look quite good. Till now, that's lagging a little bit. And also, I wanted your view on real estate. Fixed income and real estate, could it come back in style?
Well, first of all, I don't think equities is going to be a challenging year necessarily. Again, it depends on which market you're looking at. Like US markets have been very bad this year, and a lot of emerging markets have been hit really hard. So for those markets, I don't see a challenging year as compared to this year. I think the markets might actually be better. We might see markets even in the US and some of the other markets bottoming out maybe sometime in the next 6 months. I can't say exactly when, and expect that markets will actually rebound. We're already seeing flows going to China and emerging markets. So emerging markets might indeed, again, depends on the emerging markets. The Latin American pack has done really well this year because of commodity prices, but China and North Asia have done really poorly. So we're already seeing shift into those markets. India has been a big beneficiary of stable growth and stable political situation. And so India has received a lot of flows. I think as a result, India has outperformed. India is not looking bad compared to other markets, but some of the other markets are just more attractively valued. And so we might see flows on the margin go more towards some of the other markets and not towards India. So I don't expect next year to be necessarily more challenging. So I just wanted to make that point.
Punita, pleasure speaking with you. Thank you very much for joining in. Let's move on now. We've got another